So, so I think now you can see the presentation.
Yes.
So this one is public finance notes. I think John, we are going to update it to 2025. So topic one, the first topic of public finance is the introduction to public financial management. I will share the notes also, so don't worry. Now, public financial management is also called the PFM because it's a process of planning, budgeting, accounting, auditing, and reporting all the governmental or the government financial resources. So public financial management, it acts as an oversight of doing what? Of controlling the controlling and reporting the financial the governmental financial resources. So it acts as an oversight. So it is there to protect the resources of the government or the public resources. We call them the public resources. So when we say that public financial management, it is a process of planning, budgeting, accounting, auditing, and reporting of governmental financial resources, then that is correct. And what we mean is we are saying it acts as an oversight of controlling the government financial resources. Good. Now it ensures that the public funds are well utilized. So this PFM ensures that the public fund or the money from the public is effectively and efficiently used to deliver service to the people or to the citizens. Let us see the nature of public finance. Nature of public finance. Now, public finance, let us define what is public finance first. So, public finance. Now, public finance it is the study of the role of the government in the economy. So, what are those roles of the government? For example, to borrow debt internally or externally, to raise taxes, to do what we call the government expenditure. All those is the study of the role of the government. So public finance is the study of the role of the government in the economy. Then you can say, for example, so that you know what are those items. For example, borrowing, which can be either internal or external. Uh, uh, Taxes, raising of revenue through taxes and spending and government expenditure. Government expenditure. Good. Now, having said that, we can also say that it is the branch of economics that assesses the government revenue and the government expenditure of the public authority and the adjustment of one or the other to achieve a desirable effect and avoid undesirable ones. So public finance, it is there to do what? To stabilize the economy through raising of revenue and expenditure of those revenue. Higher. The rest information is not relevant. Let us see the scope. The scope of public finance. Number one, taxation, which we have already said. So one of the scope of public finance is the taxation. And taxation, remember, is the process of collecting money from the public or from the business to fund government activities. And then taxes can be of various form. We shall talk about type of tax when we'll be talking about taxation. For now, we are talking about public finance. So, but when we be talking about taxation, then we shall be talking about type of taxes. Now, but you need to know that taxation is the process of collecting money from the public so that it can fund the government activities. Another scope of public finance is the expenditure. This is the study of how government spends its money, such as building schools, building hospitals, building roads. Those are the infrastructure. Another aspect is debt. Hii budgeting tunafaa tutoe hapa. This one is supposed to get out. Yes, debt management. So that is borrowing. Now, the government can borrow money internally or externally through issue of. So if they want to borrow money internally, they can issue the treasury bills and treasury bonds, and then they can borrow outside. So the debt can either be internal or external. Then you have the fiscal policy. Fiscal policy refer to the use of government spending and taxation to influence or to stabilize the economy. So you can also say to stabilize or to influence the economy. Then monetary policy, this is the use of interest rate, but this one is not part of public finance. This one is not really part of public finance, but when you talk about monetary policy, it is the use of the interest rate and money supply. Say interest rate, comma, money supply, and other tools which are there to control the supply of money in the economy, to control the money supply in the economy. Ama to, let us say let us say to stabilize the economy so that we do not repeat the word money supply, to stabilize the economy. Let us see some of the sources of public finance. Number one is taxes. So a tax is the main source of government, so main source of public finance, taxes. So and it accounts to at least 80% of the total revenue. Number two, we have non-tax revenue, which includes things like fees, fines, rent, royalties, all those kind. They are non-tax revenue. It is also source of. Pia kuna fines in the court. This one. And then kuna sales of property. You can also say, comma, sales of government property is also part of non-tax revenue. Sales of government properties. Properties and royalties. Another source of government is borrowing, external borrowing. So external borrowing, you can also have internal borrowing. You can also put internal borrowing. Internal borrowing. Just a moment. I'm back. So can you see the my screen?
Yes.
So we were talking about the sources of public finance. We said one of them is taxes, which is the main one. Then we also talked about the non-tax sources. For example, fines, sales of government properties, royalties, and so on. Then you have external borrowing. This is where the government borrow from other governments or from international organization like the World Bank and the International Monetary Fund. Then we have internal borrowing. This is where the government borrows internally. So this one, the government borrows internally through what? Through issue of treasury, treasury bills and bonds. So they sell them to the public in exchange for money. Now, the following are the specific sources of tax revenue. Now, this one we shall not talk about it so much because we shall talk about this item also when we be talking about taxation. So, because we have public finance and taxation, so we have some specific sources of tax. For example, we have the income tax, the value added tax, the income tax. We have even the digital income tax. We have a lot of them. Digital tax, and there was another one that they was proposing. I don't remember very well, but all these form of tax are there. We shall update them as we continue in 2025. Yeah, good. That's why we shall do it when we'll be talking about taxation. Now, the following are sources of non-tax revenue. We have already talked about them. For example, we have fees. So fees are payments for services provided by the government, such as license and permits. So hii tumeshasema. So a good example is the license that people pay for business and permits. We have fines when you are taken to the court because you breach any law, then you are fined. So that fine is a source to the government. Rent, so the government also have land and buildings that they rent. So they can rent buildings and land. Now, royalties are payment made to the government for the use of the natural resources, for example, oil and gas. Now, for example, if Kenya has gas or has these natural resources, they can invite organization from outside Kenya or within to do what? To do mining. And then those organizations will pay government for doing what? For collecting or for exploiting these resources. So those fees that is paid to the government is called the loyalties. I let us see some of the ways. So what are the challenges that the government face when raising revenue? So one of the challenges, number one, it is the informal sector. So in Kenya, most business are informal, and the informal sector forms the larger part of the economy. Meaning, this part is not taxed. For example, mamboga, people who are maybe doing business, for example, kama wale wenye wanakuwa barabarani wakipika chapo, and there's a lot of money flowing within that sector. But that sector is not taxed because there are no documents, there are nothing that the government can use to collect money from them. So informal sector is the bigger part, which is not taxed. Number two, it is tax evasion. So a lot of individuals are evading tax, and that is the main also part, the main issue with the or the main challenge facing government when collecting taxes. Number three, corruption. So corruption within the government institution and corruption in the field also make it difficult for the government to do what? To collect enough tax. So corruption in the tax administration system also makes it difficult for the government to do what? To collect taxes. Now we have this question that was tested in May 2016. Now there was this question. Should we check this question? Can we check? May 2016 question number 1A. Do we check?
Yes.
So let me open. You have the past paper on your side also.
Yes.
So open. You go to May 2016. I think I need to download that. Kama sikuwa download public finance and taxation. So let me save it. Ndio hapo. So May 2016 first. Let's go to May 2016, question number 1A. Umefika hapo?
Bado.
Nasema May 2016. Mimi nimefika iko page 124.
Yeah, nimeiona.
Tulikuwa tunasema question number gani?
Question 1.
Let us go back. Nimefungua the wrong document. Okay, before we go back to that question, let us read what is Public Financial Management Act and financial regulation. Let us just talk about it first. Silvio.
Yes.
So Public Financial Management Act, PFMA, is a law that governs the management of public funds in the country. That one is simple, Silvio. So that law that is set to govern the management of public funds. It sets out the principles, procedures, and institutions for budgeting, appropriation, collecting, disbursement, and accounting for public funds. The goal of PFMA is to ensure that the public funds are well utilized, effectively, efficient, and transparent, and accountability. That one is well said, Silvio.
Yes.
Let's go to financial regulation. So financial regulation, there is it. Now for financial regulation, these are financial regulations are rules and guidelines that governs the conduct of the financial institution, such as banks, insurance company, and investment funds. The goal of the financial regulation is to protect consumer. To protect consumer is to number one, this one you can put it in points. To protect consumer. Number two, to protect market stability and to prevent financial crisis. Hivyo. These are the mbona inakaa hivi bwana, kuna shida gani? Let me use this. Ala, hii kwa shida gani? Nisumbua hapa. So but up to that point tuko sawa, sivyo?
Yes.
So that's the hapo iko sawa bas. So tumesema financial regulation, these are the rules or guidelines that governs the conduct of the financial institutions such as banks. So they're there to make sure that the banks, the insurance company, or the investment funds, or the financial institutions follow the rules and guidelines that are subjected to them. Now, financial regulations are typically enacted by the government or regulatory body, i.e., you can talk about the CBK. So CBK is a good example of a financial regulatory. So i.e., CBK, Central Bank of Kenya. Now, what is relationship between Financial Management Act, this one. So the relationship between Public Financial Management Act and financial regulation. Let us see the relationship. The Public Financial Management Act and Financial Regulation Act are both important tools for ensuring a sound management of public funds. That is number one. So both of them are there to ensure that the public resources are well utilized. And then I think that is the important item. And even look at this statement here, it's the same thing. PFM and financial regulation together help to ensure that the public funds are used in a way that is safe, sound, and efficient. They help to protect consumer and promote market stability. All these things are repetition. Hii tunaweza vuta. Can delete this part. Let us see some of the examples. Some of the examples of how the PFM and financial regulator can work together. So how can these two organizations work together? Let us see some of the examples where these two organizations can work together. Number one, the PFM may require the public funds to be invested in low-risk government-backed security. Then financial regulation may limit the amount of risk that financial institution can take on the investment. So that's how they work together. So one, the PFM may require the public funds to be invested in low risk government-backed security. Therefore, how can this be achieved with the other body, that is the financial regulation? Now, the financial regulation may come and limit the amount of risk. That is number one. So that's how they can work together. Number two, PFM may require public funds to be dispersed in a timely and transparent manner. How does this introduce financial regulation? So financial regulation may require the financial institution to have a robust internal controls to prevent fraud and errors. This helps the public funds not to be misappropriated. So this will allow public funds not to be misappropriated. Number three, how can these two work together? PFA may require that the public funds to be accounted for in a comprehensive and accurate manner. Financial regulation may require financial institutions to maintain accurate and transparent accounting record. So financial regulation will ensure that there are records so that the PFMA can use that record to do what? To do what we call accountability. So PFM can work together with financial regulation for the purpose of ensuring accountability. Haya, hiyo sio mbaya sana. Let us see the objective of the public financial management and financial regulation. So number one is to ensure transparency and accountability. That is number one in the public financial management. So the first one tumeshakuwa tukiongelea. So public financial management are there to ensure transparency and accountability. Number two, they are there to promote efficiency and effectiveness in the public financial management to ensure that everything is done in an efficient and effective manner. That is correct. Number three, let us see the next objective of PFMA and financial regulation. Number three, to ensure coordination and cooperation within public financial management. That's another one. To ensure collaboration and coordination and cooperation within the public financial management. That is correct. So it is the role of these two to ensure that there are mechanisms to promote cooperation between different entities or different departments within the government when it comes to the use of public funds. And then to promote compliance with international standards. International standards, we can also add rules and regulation. So to ensure that there is compliance with international standards, for example, international public sector accounting standards. So to make sure that the financial statements of the government are prepared in accordance to the international public sector accounting standard. So here mwisho tunaweza vuta this part. This one is not important. Hapo. So let's go to our question now. Let's go back to our question. Now, question number 1A inasema hivi. Explain the following terms as used in public PFM, as used in PFM, public financial management. Number 1, financial regulation. That is the first one, sivyo? So what is financial regulation? So tumeshaona. So that one is fine. Financial regulation ndio hapa juu. Financial regulation. Where is it? Ndio hapa. So we have the public financial management, this one, and then we have also financial regulation. So financial regulation, these are the rules and regulation which does what? Rules and guidelines that governs the conduct of the financial institution, such as bank, insurance company, and investment firm. So 1A, is that one fine?
Yes.
Part B, circulars, we have not done. So maybe we shall look at circulars later. So let us continue. But we have answered that one. So specific provincial, this one is not important. This one, let me put it in another color. This one. Indakaje bwana. So that one is not important. So let's go to this question. Now this one we're going to skip this one. Is fanyisai. This one I'm going to skip. This one tutafanya baadaye, tutatengeneza good notes. Hiyo sijabadilisha hiyo notes zake. I'm supposed to change the notes. So tunaanzia hapa. So tunaendelea kutoka hapa. Content to be included in a development plan prepared in every county government as specified under section 126 of the public financial management. So nimeruka the budget process. Sawa sawa. So hiyo itakuja baadaye. So what are the content? So hiyo wanaweza kuja kwa mtihani, wanaweza kuambia state the content that should be included in a development plan for every county government. So number 1 is the vision. So there must be a vision. Vision must be included. There must be a mission. There must be core value. Those are the items that you need to include in the development plan. Goals and objectives, and then strategies. So those are the items that the development plan should include when being prepared by the county government. So vision, the vision is a statement of the government long-term goals and aspirations. Then mission is a statement of the county government purpose and what it seeks to achieve. Then we have the core values. The core values are the principles that guide the county government in its work. Then you have goals and objectives. Goals and objectives are specific, measurable. The keyword is the word specific, measurable achievement relevant and time-bound targets that the county government aim to achieve within a planning period. Then you have strategies. These are the approaches the government will use to achieve the goals and objectives. So in an exam, wakikwambia what are some of the content of the development plan that should be included in what are some of the content to be included in the development plan by the county government, then those will be your answer. So iko sawa, development plan. So wanaweza kuuliza in an exam, so don't forget about that. I think that one we can go to the next item. Yeah. And then what they can also ask you to define what is a development plan. What do you think is a development plan? So development plan. They can also ask you to define development plan. Let's just put it now. We can use from the content. You can use the content, but you can say it is a strategic. It is a strategic plan. Strategic plan outline vision, mission, outline mission, vision, core values, goals and objectives, goals and what? Objectives and strategies. For a nation, or regional economic what? Regional economic? Nika vitu gani hapa? Region, economic, and social growth. I think that one is fine. Growth over a specified period of time. Specified period of time. That one is fine. So it's a strategic plan outlining the vision, mission, core value, goals and objective, and strategies for a nation or regional economic and social growth over a specified period of time. Now we have those content which you can find in the development plan. Kuna other items, action plan. What are some of the actions? Monitoring and evaluation framework. How do you monitor and evaluate? You evaluate the system or progress, but it also consists of a budget. It also consists of implementation plan, risk management plan, all this, communication plan. How do we communicate with the stakeholders? And then what are the stakeholders' engagement? Good. Number B of that question, May 2016, number B. What was number B saying? What was the requirement for number B? Number B.
Outline its general responsibilities of a county treasury with respect to public funds.
Question number 1B.
May 2016. Niyo. Responsibilities of a county treasury with respect to public funds.
Unasema question number 1B or question number 1A part 2.
Treasury circulars.
Treasury. So what's a treasury circular? Haya, sasa tuende kwa notes yetu. Just a moment. Haya, ndio treasury circulars. Now, these treasury circulars, these are issued by the national. These are supposed to be. We can just say national treasury. Let us put national treasury. National treasury to provide guidance on specific aspect of the budget. These are treasury circulars are issued by the national treasury to provide guidance on specific aspect of the budget process. For example, there are treasury circulars on preparation of the budget estimate, allocation of the funds to the government entities, and monitoring and evaluation of the budget. So when we talk about treasury circulars, we say these are issued by the National Treasury to provide guidance on specific aspect of the budget process. So these are the items which are issued by the National Treasury. So these are the items which are issued by the National Treasury just to provide the guidelines on how the budget process should be conducted. And we have given an example, and we have said the treasury circulars. For example, there are treasury circulars on number 1. There are those circulars which assist in preparation of the budget. There are also those circulars which assist in allocation of funds to the government entities and monitoring and evaluation of those budgets. So when we talk about circulars, mostly we are talking about budgets. So mostly we are talking about budgets. So circulars are a type of communication issued by the National Treasury to provide guidance and instruction to the ministry, department, and agency on various aspects of public financial management, including, for example, preparation and monitoring of budget. So I think what I had not said, it is a communication device or a communication issue, not a device, or it's an issue. So this one, it's a type of communication issued. So we can just say here that treasury are communication issued by the National Treasury to provide guidance on specific aspect of budget process. I think that one is fine. So if you go to this paper that they did in November 2016, question number 1A, part 2, explain the following terms as used in public financial management. Number 1, financial regulation, and number 2, treasury circulars. So treasury circulars, we have said these are communication issued by the National Treasury to provide guidance on specific aspect of budget. Or you can use the second one, this one. Circulars are communication issued by the National Treasury to provide guidance to the ministry or any other government departments on various aspects of public financial management. And we have given an example, and we have said a good example is the preparation and the monitoring of budgets. That one is okay. Let us see some of the content of circulars. This one they can ask you in an exam. You state the content of circulars. So what are some of the content of this circulars? Number one, one of the content is to provide procurement and disposal procedure. So circulars provide guidance on how to procure goods and services and how to dispose them and how to manage contract. Number two, budgeting. So circulars also provide the information about budget and financial reporting. So for budgeting, that is to provide budgeting processes, establish reporting requirement, and provide guidance on how to manage and account for public funds. Another content is tax and revenue collection. So these circulars provide guidance or information on how the revenue should be collected. So what are the procedure of collecting taxes? What are the tax laws? It also provides the tax administration practices. Another content of this is the public financial management policy. So it provides, the circulars may communicate new financial management policy that have been issued. They also provide the guidance on interpretation of the existing law and the policies. So when these circulars are issued or are communicated by the National Treasury, those circulars are there to do what? To give any financial management policy, including the explanation and interpretation of any existing policy or establishment of a new policy. Let us see another content, if there is. So it also has the control part. So another content is risk management and internal control. So the circulars may outline risk that the government faces and what are some of the controls. Controls to do what? To detect those risks. And then accountability and transparency. So another content of circulars is accountability. Accountability and what? Accountability and transparency. Now let's go to November 2020. November 2020. Can you open November 2020? November 2020. Sa blue paper inakwanga blue ya November inakwanga November 2020 inakwanga blue paper. Kiona blue paper ujue ni hiyo. November 2020. Ala. Ndio paper zimejificha aje? November 2020. Umefika hapo? Niambie page ngapi?
83.
Yes, November 2020, that is 83. Now, read at this question. Which question? Read question number 1A.
The Public Finance Management Act requires that not later than 30th August in each year, the Cabinet Secretary shall issue to all national government entities a circular setting out guidelines on the budget process to be followed by them. With reference to the above provision, outline 4 contents of the circular.
What are those contents? One of them.
Procurement and disposal procedures.
Yes. So, but you can limit yourself to what? To budget. Sawa sawa. So, akisema budget unajaribu unaweka yenye inalingana na budget. For example, you can talk about accountability and transparency. That one go hand in hand with the budget. You can also talk about budgeting and financial reporting. You can also talk about how to correct taxes, revenue correction. Sivyo? Go talk about financial management policy. Hizo ziko sawa?
Yes.
Let us proceed. Now, cash flow projections are used by the government entities to forecast future inflow and outflow. That one is not important. Now, but they can tell you what's a cash flow projection. Now, a cash flow projection, you can say you can say it's a forecast that is used to do what? Cash flow projection. These are used by the government entities to forecast for future cash inflow and outflow. This information is used to ensure the government has sufficient funds to meet obligations. So they can ask you to define what is a cash flow projection as used in public financial management. Then they can also ask you to define what's a budget estimate. A budget estimate, this is a detailed breakdown of the government spending and revenue plan for an year. And it is prepared by the National Treasury. Hii inafaa niweke National Treasury. National Treasury and submitted to the National Assembly for debate and approval. They can also ask you to define what is revenue raising measures. Now, these are the policies and strategies used by the government to raise revenue. Tuko sawa? So these are the policies and strategies used by the government to raise revenue. Now, for budget process, let us delete this one. We shall talk about budget process later. Hiyo tutatengeneza notes baadaye. So let's see some of the key challenges in the budget process. So what are some of the challenges that is there? Number one of the key challenges in the budget process is, number one, inadequate timing. So there is so you find that you do not have enough time to prepare for the budget because of delays. So you know the government, there is a lot of procedures, bureaucratic procedures, which are very lengthy. So there's this person who is supposed to sign, there is Nani, Ayuko. So there is inadequate planning. So that is one of the disadvantages. Number two, lack of coordination within the government officials. So there is no, and then number three, corruption kama kawaida. Corruption iko kila mahali. This one is a common point. Then weak oversight. So weak oversight or weak institutions also contribute. We can also talk about weak institutions. Weak institutions. So weak institutions can also make it hard for this budget process. So weak institutions is also another challenge that makes this process becomes a challenge. Now, let us see the role of the National Treasury and the County Treasury in respect to public finance. So what are the roles of public finance in respect to this? Number one of the role of the National Treasury and County Treasury with respect to public funds is, number one, preparing and implementation of national and the county budget. So that is number one. That's one of their role, to prepare budget and implement a budget. Number two, another role of the National Treasury and County Treasury is to raise revenue. Another role is to raise revenue. Once they raise revenue, another role of them is to do what? To allocate that revenue that they have collected. So number one, preparation of budget. Number two, raising of revenue. Number three, allocating of that revenue or resources to the National Treasury, to the government, county government, and so on. Let's see if there is others. Yes, monitoring and evaluation of budget. So another role of the National Treasury and county treasuries in respect to public funds is to monitor and evaluate the budget. And then another aspect for it is to ensure. So another role is to ensure that there is transparency and accountability when it comes to what? To allocation of budget. or when it comes to the process of raising revenue. Also, when we are talking about monitoring and evaluation of the budget, transparency must be there and accountability. So it is the role of the National Treasury and County Treasury to make sure that there is transparency and accountability when it comes to the use of public funds. Now naendelea hapa chini bado inaendelea. National Treasury and this one, National Treasury, this one is the same thing. Na hapo juu. National Treasury and County Treasury are responsible for ensuring that the public financial management system is effective and efficient. They do so by establishing a sound financial system, providing training capacity. Okay, this one is okay. Still same. Now, this one is for the system. Now, the National and County Treasury ensures that public financial management system, so upper the keyword is the word system, this one, system, is effective and efficient. So how do they make sure that the system is effective and efficient? Number one, by establishing and maintaining a sound financial management system. Number two, by providing training and capacity building to the government officials or workers. And then they also promote good governance. So to ensure that the system is also safe, they promote what we call the good governance. So that one is fine. Now let us see some of the responsibility of the National Treasury and the County Treasury. So what is the responsibility of National? Let us start with the National Treasury. So this one, some of the responsibility of National Treasury and National Treasury and County Treasury. Number one, na hizo ndio ziko pale juu zilikuwa tumeshasema. Number one, preparation of budget. So hizi ni repetition actually. Itakuwa tu same, utapata ni same. Number two, raising of revenue. Tulikuwa tumesema hapo juu. Number three, allocation of resources to different entities. Monitoring and evaluation. So hizi ni repetition. Tumeshazisema.
Yes.
And then accountability and transparency. Sio tulikuwa tushaongelea pale juu. This County Treasury is the same thing. Repetition. Can you see? So can you read May 2016 question number 2B? May 2016 question number 2B.
Discuss four responsibilities of the National Treasury in the administration of the consolidated fund.
It's the same tu na hizi. National Treasury ndio hizo. But tutafika pia umesema May 2016 question number 2B.
Yes.
So ilikuwa inaongelea mambo na National Treasury, si County Treasury.
National Treasury.
National Treasury. So those are the answers. You can put those as the answers. So. Aya. Can you read December 2021, question number 2A? December 2021, question number 2A. December 2021.
Highlight the steps followed by your county government in developing its annual budget.
Hiyo budget sio hiyo. December 21 question. Hiyo budget nisema tuangalia baadaye. Niko nataka hiyo ya December 2021 question number 2A. Hakuna ingine December, any December 2021 apart from you. Any December sitting? December 2021. Ama ni hiyo tu peke yake?
Yes.
2A. Ngoja niende kwa hiyo page
69.
Na hii nilitoa wapi swali nimeweka hapa December 2021. I think ni pick the wrong. Sawa. Anyway, let's see the principles and regulation that governs the public finance. So principles of public finance regulation. So what are some of the principles of public financial regulation that governs all aspects of public finance? Number 1 is the openness and accountability. So that is the first principle, openness and accountability. So all aspects of public finance must be open and accountable to the public. That is number 1. So openness and accountability. Number 2, efficiency and effectiveness. Efficiency and effectiveness. So the government must use public resources efficiently and effectively. Then sustainability. This one is to ensure that the government must ensure that its public finance are sustainable in the future. For example, if they borrow, they can repay. And then integrity. So all aspects of the public finance must be conducted with high integrity, meaning that the government official must be honest and they must practice ethical behavior. Then the rule of law. So they must adhere to the rule of law. So the government must comply with the law in aspect of the public finance. So they must adhere to the law. And this one was tested in which sitting? These principles. If you go back, now this was tested in August 2023, question number 2B, 2023, question number 2B, and November 2017, question number 1C. You are required to state the principles of the public financial management. So openness and accountability, efficiency and effectiveness, sustainability, integrity, and the rule of law. Now, this one was tested also in another sitting, attributes of a good accounting. Sorry, attributes of what? Attributes of a sound budget. So this one was tested in September 2021, question number 2A. Number 1, periodicity, from the word period. Now, this refers to the frequency with which a budget is prepared and reviewed. So that one is periodicity. So attribute of a good or of a sound public budget. Number 1, periodicity. So refers to the frequency with which a budget is prepared and reviewed. Hata tunaweza katia hapo, hizi zingine kelele tunaweza wacha tu. Anyway, number 2, predictability. Refer to the extent to which the government budget, refers to the extent to which the government's budget plan are reliable and can be accurately be forecasted. So that's from the word predict. So extent to which the government budget plan is reliable and the extent to which those budget can be forecasted. Then comprehensiveness, from the word comprehensive, it must cover in detail a lot of items. So we can say refer to the extent to which the budget covers all the government revenue and expenditure. It must cover everything. Haya, ndizo tu tushamaliza. Kuna zingine. So in addition to those, we have others. So in addition to periodicity, predictability, and comprehensiveness, there are a number of other attributes of a sound budget. For example, realism, from the word real. So the budget must be based on realistic circumstances or estimates of the revenue and expenditure. And then we have efficiency. The budget should allocate resources in a way that maximizes the benefit to the society. Then equity. The budget should distribute resources in a fair and equitable manner. Then flexibility, from the word flexible. The budget should be able to adopt the changes in the economy or the changing economic condition. Then sustainability. The budget should be sustainable for a very long period of time. Tuko sawa hadi hapo? Open November 2018, question number 2A. This one is a very common question. They can tell you to define what's an appropriation. What's an appropriation? So this one, they can ask you to define an appropriation. So what's an appropriation? The appropriation is a law passed by the parliament to authorize the government to withdraw money from the consolidated fund. Sawa sawa? So an appropriation is a law that is passed by the Act of Parliament to authorize the government to withdraw money from the consolidated fund for the purpose of financing the budget of the financial year. Tuko sawa? Let us see the PFA may authorize the process for enacting appropriation. So what are the steps? Steps of enacting appropriation. So what are the steps or process? Number one, preparation of budget. So number one is the preparation of budget. So the first process of appropriation is preparation of what? Budget. Once you prepare the budget, you present the budget to the parliament. Once you do what? You present the presentation of the budget to the parliament. Then the committee stage consideration. So the committee within the parliament do consideration. So the budget and appropriation committee examines the budget line by line, seeking classification, making recommendation for amendments, and so on. Once that is done, then we have the reporting stage. Then once the reporting stage is done, then the passage of the appropriation bill to the passage, and then the assent of the president, and then the assent of the president. And this one is also the budget process. And this one now, nilikuwa nimesema tuongelea budget process. This one can also be the budget process. So the budget process. But for now, I'm going to review the budget process. But for now, these are the steps or the process for enacting an appropriation act. That is the withdrawal of money from the consolidated fund. So those are the process. Now you can also be asked in an exam to define what is a low budget absorption capacity. Now, low budget absorption capacity refers to the inability of the government to effectively utilize its allocated resources, leading to unspent fund and a delay in the implementation of the project. That is what we mean by the low budget absorption capacity. So this happens when there is inability of the government to do what? To utilize the money given to them, leading to what? Leading to unspent funds and delays in the implementation of development projects. Now let us see some of the factors which might lead to low absorption capacity. So what are some of those factors which might lead to this condition? Number one, institution weakness. That's number one. So when we have an institution weakness, then there is likelihood that we will not use our resources very well. Number two, delay in disbursement. So when there is a lot of delay in disbursement, then there is likelihood that money will remain unutilized and will lead to low budget absorption capacity. Then we have capacity constraints in the county level also. It's a contributor. For example, lack of personnel, expertise, and infrastructure to manage all the money or to manage the money within the county level. Then unrealistic budget also. So when the government is developing unrealistic budget, then there is likelihood that low budget absorption capacity will occur. Then corruption and mismanagement kama kawaida. This is a very common point in an exam. So kwa exam ukiona hujui anything, you can also say corruption and mismanagement. It falls in so many parts. So let's see some of the consequences of low budget absorption capacity. So what happened when the government does not utilize its money? So what happened when the government does not use its funds? Number one, unfulfilled project outcome. So when the government does not use its money, number one, there will be no development, obviously. So or there will be unfulfilled development. That is number one. Number two, there will be underutilization of resources because the resources are not being used. So that automatically will lead to underutilization of resources. Number three, erosion of public trust because the public will not trust the government because the government is doing nothing with it. So the resources are there hanging. And then it will lead also to slow economic growth. To lead to slow economic growth. Now, how do we address this issue of low budget? What do you think we should do so that we can solve this issue of low budget absorption capacity? So what should we do to make sure that the government uses all the money effectively and in a good manner? Number one, to come up with strong institutions. This one is the main one actually. For example, to make sure that our institution, for example, National Treasury, as an institution, is very strong and it can deal with corruption effectively. Number two, streamlining the procurement procedures or process. So that is another way which we can avoid the issue of the low budget absorption. Number three is to enhance transparency and accountability. To improve budget planning and forecasting, that's another one. To promote public participation, and ya mwisho kama kawaida, to fight corruption. Also, when you fight corruption, that's another way to address the issue of low budget absorption capacity. So to fight corruption. So to fight the corruption could be another one. Aya. Tunasonga poa. But uzuri hizi ndio nitakutumia pia hizi notes utapitia. So don't worry about the notes. Now in an exam they can also ask you to define what is a vote. So what is a vote according to public finance? Now, acha ni kati hapo chini iende hapo. Now, let us see what is the definition of a vote. A vote is the appropriation of public funds. Kumbuka appropriation tulisema ni nini? Appropriation we said pale juu we say that appropriation deals with the withdrawal of money. So once the Appropriation Act deals with withdrawal of money after being authorized. Now, a vote now is the withdrawal of public funds for specific purpose. Now, but we're not going to use the word withdraw. We're going to use the word appropriation because that is the word that it is used in the public finance. But the word appropriation can be used as withdrawal of money. So a vote is an appropriation of public funds for specific purpose. This term is typically used in the context of budget, where the total amount of money available is divided to different votes. Each vote is allocated to a different department, ministry, or agency. Haya, hiyo tumemaliza now. So when you talk about a vote, we are talking about withdrawal of money, withdrawal of public funds for specific purpose. Now, you can also be asked to define what is government-linked corporation. So what is a government-linked corporation? It's a company that is owned or controlled by the government. That is all. It's a company that is owned and controlled by the government. That is it. Now it is created to do what? To provide services to the public, such as water, to provide water, electricity, transportation, etc. Tushamaliza. Haya, let's go to the related terms. Now, related terms number one, appropriation. We talked about it. An appropriation is a legal authorization to spend public fund or to use public fund. It's the same thing. Nilikuwa tumeongelea pale nyuma. Withdrawal of money for public purpose. The same thing. So an appropriation is a legal authorization to spend money. So who authorized that one? It is the act of Parliament. What's a budget? A budget, we have said, is a plan. A budget is a plan for how public funds should be used. Expenditure tumesema hivyo. These are the payment which is made by that is made by the government from the public. So from the public funds. So this is expenditure. These are the payments that are made by the government from the public funds. Revenue, this is the amount of money collected by the government. A subsidy. We also talk about a subsidy. A subsidy is a financial assistance provided by the government. For example, fertilizers, cheap fertilizers, or fertilizers kwa bei nafuu. So that's a good example for subsidy. So a subsidy is a financial assistance that is given to, but that is given by the government to a group of people or to the citizens. For example, a good example for subsidy is fertilizers. Tax, what is a tax? This is a compulsory payment made by the individual or business to the government. So it is a compulsory. There is no debate about it. Good. Now, that's the end of our class today. Topic 1. How is it?
Good.
So thank you. So tomorrow we are going to start from topic 2. Tomorrow we are going to start from topic 2, and we are topic 2 to cover some item. So I think tomorrow. Now, before we end our class, can you go to the last sitting? That is December 2025. Question number 2A. Number 2A. Can you read?
The National Treasury is mandated with the preparation of annual budget estimates, coordination and preparation of the national government budget. Towards this function, the Cabinet Secretary issues out a Treasury circular. In relation to the above statement, summarize 4 contexts of Treasury budget circular.
Iko vipi? Iko sawa? Haya, acha tuende the next. Ujue theory kwa public finance, theory ni 60 marks. 60 and then hesabu ni 40 marks. August 2025, was there any question about budget? Yes, question number 1D. August 2025 1D, can you read?
Explain for responsibilities of the National Treasury in overseeing the management of public finance at the national level in Kenya as mandated by the Public Finance Management Act 2012.
So to repair national level na county level?
Yes.
That one utaangalia. That one is fine.
Yes.
Haya, wacha tuangalie the last sitting, hiyo ingine inafuatia afu tumalizie hapo. Then we say that will be the end of our today class. That is, the next sitting is April 2025. First April 2025. April 2025 question number what? Number 1B ndio tujafanya, tutaifanya, sivyo? Budget process.
Yes.
Can you say 1B? Hiyo ndio tulisema tutafanya. Yes. What about question number 2B? Can you read?
Explain 3 ways that county government could adopt to improve their financial capacity during the budget process when faced with challenges in revenue generation.
What do you think? This one I think is a question for you. Try and think. So explain ways that the county government could adopt to improve their financial capacity during the budget process when faced with the challenges in the revenue generation. So what do you think are ways that the county government could adopt to improve their financial capacity? I think that one we can talk about the other sources of finance, if you. They can lease, for example, they can do royalties. That is, they can lease their properties. Sivyo?
Yes.
We can also talk about things like what other things they can do to raise money so that they can get out of these challenges of revenue generation. They can also raise the money through the county government. For example, they can do what? They can increase the base of licensing. Sivyo?
Yes.
So they can ensure that they have done what? They have licensed everyone, even those who are not within the town, sivyo? To raise more money, sivyo?
Yes.
They can come up with the programs that are there to do what? To assist them to raise money. For example, they can charge fees for licensing by doing what? By expanding by expanding their what? So was they rely to the business in town, they can go outside town, sivyo? So yes. if taxes may fail, they can think of other ways, sivyo? They can borrow, they can try to borrow, the county government can try to borrow from the public, do the issue of bills. They also have treasury bills and bonds within the county. Now, that I think that is well said. So that will mark the end of our today's class. Now we can meet for tomorrow. We do topic 2. Any question?
No.
Good. Now kuna hii nyingine, did you define what's an appropriation act?
Yes.
So you have to question number 1A part 2. The other hiyo sitting inafuata. So you go and check any other that you can find. So that is all. I wish you a good